lot of silver used to get recycled. A lot of silver doesn't get recycled anymore. One of these days, we're going to run short of silver, and silver really is going to go to the moon. I'm shocked that we've got $2,300 gold, $32 silver, because silver was $50.25 44 years ago. I think the single best investment is silver. But if you're talking about shares, I think the junior resource market is the cheapest it's ever been in history. And if we can avoid blowing up the world, the junior resource market's going up 5 to 10-fold.
Gold has been breaking records throughout 2024, marking significant milestones in its price trajectory. In March, the spot price surged to $2,160 per ounce. April started with even greater heights, as gold soared to an all-time high of $2,265 per ounce. Recently, on May 20th, gold peaked at an astonishing $2,435 per ounce, further solidifying its bull run. Year to date, gold futures have rallied nearly 13%, reflecting strong investor interest amid global economic uncertainties. Conversely, silver has exhibited more subdued price movements than gold's volatility. After reaching a high of $31.49 last Friday, silver retraced slightly on Monday, but remained within the previous trading range. The recent bullish reversal in the weekly timeframe suggests the potential for further upside, despite its quieter performance relative to gold. What's particularly noteworthy amidst these price dynamics is the shifting locus of pricing power in the precious metals market. According to famous analyst Bob Moriarty, the pricing influence has now gravitated towards Shanghai, traditionally dominated by Western markets like London and New York. Chinese markets, increasingly pivotal, are shaping the pricing dynamics of both gold and silver. This transition underscores China's growing role in global commodities markets. Recent developments in Chinese government bonds also highlight significant market shifts. Driven by geopolitical tensions and economic uncertainties, investors have flocked to Chinese bonds, driving prices higher and yields to record lows. This surge reflects a flight to safety amidst concerns over China's real estate market turmoil and volatile stocks. Such movements are reminiscent of historical herd mentalities observed in global markets during periods of instability. Reflecting on past market cycles, such as the peak in precious metals prices in 1980, provides a cautionary backdrop. Back then, sentiment-driven buying at peak prices eventually led to sharp declines. Today, similar sentiment dynamics surrounding Chinese bonds raise cautionary flags among seasoned investors like Bob, who foresee potential financial turbulence. We will present clips from Bob Moriarty's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Certainly, $2,300 gold. Gold got as high as $2,450. And that certainly reflects the uncertainty geopolitically and financially in the world. What's interesting to me is silver hasn't moved that much, but there's been a shift in the center of gravity, and it's no longer the West that controls the price of gold and silver. The price of gold and silver is now set in Shanghai, and the Chinese control it. Chinese government bonds are on fire. That's raising alarm bells in Beijing. And that article, believe it or not, came from CNN. I don't look to CNN for investment advice. But what's happening basically is because of the geopolitical crap going on, and because of the change in the value of the dollar, and because of the total crash of real estate in China, you have this mad rush for government bonds in China. Humans are animals, okay? And they react the same way birds do and fish do and gazelles in Africa. They want to be part of the herd. And the Chinese are no better or no worse than Americans or Brits or anybody else. And now they're rushing into bonds. And every time the mob makes a big run like that, it ends in disaster. However, At some point in time, they're going to do that to gold, and they're going to do that to silver. Now, I was in gold and silver. I was buying gold as early as 1968. And in January of 1980, I looked around and all these people that I had been telling to buy gold and silver for years, all of a sudden were telling me, hey, Bob, what you got to do is you got to put as much money into gold and silver as you can. And I thought, wait a minute, where were you when silver was $1.29 an ounce? Where were you when gold was $35? And they wanted to buy gold when it was $8.75. They wanted to buy silver when it was $50.25. So I sold all my gold and silver in January of 1980 because the sentiment scared me. The sentiment on Chinese bonds now absolutely petrifies me. I believe we're facing a financial catastrophe. And we've got so many things. Before you started recording, we were talking about there are so many things going on right now that are dangerous. And one little spark is going to ignite a bonfire.
Historically, the US dollar has been a pillar of global finance and faces challenges amid a shifting geopolitical climate. Recent actions, such as imposition sanctions on countries like Russia and the seizure of assets, have sparked international scrutiny and distrust. These actions, seen by some as overreach and financial aggression, have inadvertently eroded confidence in the dollar's stability and reliability as a safe haven asset. For instance, when the US and Europe seized $300 billion of Russian assets, including substantial holdings in treasuries and bonds, it sent a stark message about the risks associated with placing financial assets within their jurisdiction. This move strained relations and prompted reevaluations globally about the security of holding assets denominated in US dollars. Bob highlights that the repercussions are visible as even smaller nations and institutions, like Japanese banks, consider reducing their exposure to US treasuries due to rising interest rates and fiscal pressures. This trend reflects a broader sentiment, where countries diversify their reserves and seek alternative assets to safeguard against potential volatility in the dollar's value. In this context, the gold and silver market is a barometer for global economic uncertainties. Gold prices, hitting record highs in 2024 amid geopolitical unrest, underscore its role as a traditional safe haven asset.
The dollar is not going to disappear. The dollar is not going to go to zero. Okay, we could have hyperinflation. Okay, we could have a substantially reduced value of the dollar, but the dollar should be trading 5 years from now at $10 or 10 years from now, regardless of the value. And again, this is not something that Russia and China and India have done to the U.S. It's something the U.S. has done to itself. It's committed suicide. When the sanctions were put on Russia in February 2022, the United States and Europe seized $300 billion of Russian assets, including a lot of treasuries and government bonds. That was stealing. Now Europe has said, well, we're just holding those for the Russians. When we break Russia apart, okay, we'll give them their money back, which is kind of a bizarre thing to say. But since there is interest on the money, we'll take the $50 billion a year in interest and we'll give it to Ukraine. Well, the Russians understand that whether they're stealing the principal, which is $300 billion, or the interest, which is $50 billion, stealing is stealing. So what the United States and Europe has done is said, if you trust us and you put your money where we can get our hands on it, if we don't like it, we're going to steal your money. And if you think about it, that's a real bad idea. And what everybody's going to say, I'm not going to put my money where you can get your hands on it. I'm going to take my money away from you. It's even gotten to the point where minuscule little African countries are going to the United States and going to the UK and say, oh, by the way, we want our 50 ounces of gold back, okay, because we don't trust you anymore. So what the United States and NATO are doing are committing financial suicide by doing this. Now, a Japanese bank has just said that they're going to sell, I think it's I think it's $53 billion in treasuries between now and next March. And they're not all US treasuries. But what Japan has said is, look, our financial situation is so precarious because interest rates have gone up so much that we're going to have to sell our assets. So there's a lot of attacks on the dollar, but they're attacks that were not caused by Japan or China or Russia or North Korea. They're attacks that were caused by the United States and Europe. It's foolish to an extreme because as the US dollar loses its value, inflation in the United States is going to go through the roof. Now, it's already gone through the roof in Europe. And if you look around a little bit, there's a few sites you can go to where somebody had an account at Costco, and there was something they bought 2 years ago, and they spent $125 for, and now it costs $305. So there's inflation going on that nobody wants to admit, and that's an indirect way of hurting the dollar. And that you've got this self-induced suicide by stealing. The United States keeps doing things that they would never allow anybody else to do. But they think, well, if we steal, it's okay. But it's not okay with the Russians. It's not okay. I think there's 40 nations that the United States has sanctions against. You've got Cuba, you've got Venezuela, you've got China, you've got North Korea, you've got Russia, you've got Belarus. And the sanctions don't work in the first place, but they do send a clear and convincing message to your enemy.
Last week saw silver achieving its strongest weekly increase since mid-May, soaring by approximately 7%, while gold also showed robust growth with a 2.2% rise. Silver's remarkable surge was fueled by its breakout from a technical continuation pattern, coinciding with a decline in the US dollar against a basket of global currencies due to lackluster US economic data. Share your thoughts on Bob's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.